Hey everybody, today in this video, I'll delve into the different ways you guys can invest $100,000.
Investing $100,000 is not just about seeking profit. It's a journey that intertwines with your personal goals, financial needs, and the level of comfort you have with market fluctuations. When we talk about investment strategies, it's paramount to align with your life's objectives. Are you gearing up for retirement, saving for a child's education, or building an emergency fund? Each goal requires a tailored approach. Furthermore, your risk tolerance will dictate whether you'll sleep soundly at night with your chosen investments. Let's not forget about diversification. It's the golden rule of investing, the art of not putting all your eggs in one basket. Diversification can help reduce the risk of your portfolio without necessarily compromising potential returns. It's about spreading your investments across different asset classes like stocks, bonds, real estate, just to mitigate the risk of a single asset's poor performance significantly impacting your overall portfolio. Moving into long-term investment strategies, we define these as investments that span over a time horizon of 5 years or more. This long view is essential because it allows the power of compound interest to work its magic. Compound interest is just the interest on interest. It's what happens when the earnings on your investments start earning their own earnings. Over many years, this effect can turn your $100,000 into a much heftier sum. In the realm of stocks, it's noteworthy that the historical average annual return of the S&P 500 sits around 10%. However, past performance is not indicative of future results, and it's essential to understand that market conditions can change vastly. Dividend-paying stocks are a dual blessing, offering a potential increase in value while paying out a portion of the company's earnings regularly. For those seeking a more hands-on approach, index funds and ETFs offer a great way to gain exposure to a broad segment of the market without having to pick individual stocks. This strategy allows you to benefit from the general rise of the market. Then we have blue chip stocks. These are the titans of industries, companies that have stood the test of time and shown steady growth, representing stability in a long-term portfolio. Turning to bonds, they are traditionally viewed as less risky than stocks and therefore play a crucial role in a balanced portfolio. Government bonds are backed by the Treasury, making them quite secure, whereas municipal bonds issued by local governments often provide tax-free interest. Corporate bonds issued by companies typically offer higher returns but come with higher risk. Managing interest rate can be done with bond ladders, a strategy that involves holding bonds with different maturity dates to mitigate the impact of fluctuating interest rates. And when it comes to bonds as a portfolio stabilizer, their less volatile nature provides a cushion when the stock market is tumultuous. In a diversified portfolio, bonds can be the anchor that steadies the ship during a stormy market. Real estate is another cornerstone of a robust long-term investment strategy. It offers the potential for value appreciation over time and the possibility of rental income, adding another stream of passive revenue to your portfolio. Observing migration trends can give clues to potential growth areas. For instance, Texas has been a magnet for business and individuals alike, escaping the higher cost of living and taxes in places like California. This migration supports real estate demand, potentially increasing property values and rental rates in the state. For those who aren't too keen on the idea of being a landlord, real estate investment trusts, or REITs, provide a way to gain real estate exposure without directly managing property. REITs are companies that own, operate, or finance income-producing real estate across a range of property sectors. They offer a form of long-term investment with the added benefit of liquidity, as they can be bought and sold on major stock exchanges. In conclusion, a $100,000 investment can be a powerful seed that, with the right strategy and time, can grow into a robust financial tree. Whether you're investing in the stability of bonds, the potential growth of stocks, the tangibility of real estate, or the tax advantages of retirement accounts, a patient and disciplined approach can help navigate the void of long-term investing. When we pivot to short-term investment strategies, we're operating within a much narrower time frame. Typically, we define short-term investments as those within a timeline of less than 5 years. These are suited for objectives like saving for a down payment on a home, a dream vacation, or bolstering an emergency fund. In the stock market, these strategies often center around growth stocks. These are companies and shares that are expected to grow at an above average rate compared to other companies. They can be volatile, but the potential for rapid growth makes them attractive for short-term gains. Sectors with high short-term potential could be tied to current trends like renewable energy or tech innovations. We also see speculative plays taking center stage in a short-term portfolio, with investors eyeing initial public offerings, IPOs, or special purpose acquisition company, SPACs. While they often offer the allure of getting in on the ground floor, they're accompanied by higher risk due to their unproven nature. Technical analysis can be the short-term investor's best friend. This method involves analyzing statistical trends gathered from trading activities, such as price movement and volume, in an attempt to predict future price movements based on historical patterns. It's less about the fundamental strength of a company and more about market psychology and trends. Then there's the exciting world of options trading. Options can be complex, but they provide additional tools for investors. They can be used to speculate, providing the leverage that can amplify gains or losses, or to hedge, helping to protect against declines in stock prices. Strategies like writing covered calls can generate income, whereas buying protective puts can serve as insurance against a downturn in stock value. In the realm of real estate, short-term strategies might include flipping properties, buying, renovating, and selling homes for a quick profit. While this can be lucrative, it often requires a deep understanding of real estate markets and substantial upfront capital. For those not interested in the renovation challenge, the short-term rental market presents another opportunity. Platforms like Airbnb have made it easier than ever to profit from vacation rentals, especially in high-demand locales. Land speculation involves buying undeveloped land in an area that may see future growth due to economic or infrastructure developments. It's speculative because it relies on the if the area develops as predicted. When comparing short-term and long-term investments, it's important to consider the trade-off between risks and potential returns. Long-term investments generally benefit from the ability to ride out market volatility, while short-term investments may be subject to sharp swings due to market conditions. We must also consider current economic and market trends, such as the interest rate environment, which can affect both long-term and short-term investments. For example, rising interest rates can make bonds more attractive in the short term, while potentially depressing stock prices. Advancements in technology can create new sectors for investment and growth, just as geopolitical events can introduce the risk that impact global markets. Short-term strategies may need to adapt quickly to these changes, whereas long-term strategies might look beyond them. The concept of investment diversification comes into play across both strategies. While concentrated portfolio might yield higher returns if a particular sector performs well, it can also lead to significant losses. Diversification can provide a safety net, spreading risk across various assets. To bring our strategy discussion full circle, always remember that investing is not a one-size-fits-all endeavor. Whether you're opting for a short-term or long-term approach, the key is to ensure that your investment strategy aligns with your goals, risk tolerance, and the market environment. For those of you looking to delve deeper into long-term stock investments, be sure to check out the video linked in the description, where I cover the best 5 long-term stocks that stood the test of time. Don't forget to subscribe for more investment insights and strategies, and I'll see you guys next time. Thank you so much for watching.